Thank you, Paul. And I must say today is a big day for our company. It's been a great honour to have been able to attract someone of Paul's calibre to our small company. And we've certainly had an interesting ride along the way over the last 5 years. When Paul joined this company, we were just coming out of the Northern Territory moratorium. Our balance sheet was in a parlous manner. We had less than $1 million cash in the bank, which was way too little even to barely keep the lights on. And we had not carried out any on-ground activities in the Beetaloo. And really under Paul's leadership, you know, in my opinion, we've achieved some pretty amazing things as a small company. Before Paul came along, we were considered what is referred to in the industry as a land banker, which is just a company that sits on its acreage and hopes it goes up in value. But Paul and I and all of our shareholders share a vision for Empire to be a major provider of gas that Australia so desperately needs, particularly given shortages that have emerged recently. And Paul, it's been a great honour to work for you and with you. And I hope that we can continue to get your wisdom in the years ahead as we progress into development. So, Paul, thank you again for your service to the company. So I thought I'd just start off with a bit of a macro theme about what's happening in global gas markets, so, and the future for the gas for that matter. So, certain players will tell you that gas assets are going to become stranded assets and that the future for gas is finished, and the data simply does not support those assertions. The reality is that the more we progress towards a net zero energy transition, the more we will need gas. And indeed, if you look at the lived experience in the United States, the greatest contributor towards a reduction in carbon emissions over the last 20 years has been the development of the shale gas industry in America. Not due to government policies, but rather because gas became a very affordable feedstock for baseload power, and it actually dislocated coal-fired power as a more affordable energy source and with much lower emissions. Not only is Australia going through a transition, but also we're seeing this right across Asia and the world. And also as Asia and India move into the middle class, the energy requirements of these countries will require additional energy. The Shell Energy Outlook from this year really speaks to that in terms of forecast LNG demand. Last year, global LNG demand was 396 million tonnes, and by 2040, Shell forecasts that it will reach 700 million tonnes. So there is going to be an increasing demand for LNG in the years ahead, and as a global community, we face a choice. We can extract gas from safe and stable jurisdictions that have solid regulation, or we can rely on less favourable jurisdictions. And in my opinion, there is no better place to operate in terms of responsibly developing these resources than Australia. Not only is there set to be an increasing demand for gas, but we're also seeing in this slide on the right side, which came from the ACCC and AEMO, that while demand in Australia is expected to remain relatively flat, actually the existing sources of supply continue depleting, and for that reason we will need new sources of gas, and the Beetaloo is perfectly placed to provide that additional supply that we will need in years ahead, particularly given the extremely low CO2 in the resource, which I'll be stepping you through shortly. So the Beetaloo is Australia's largest undeveloped gas resource. The Northern Territory Geological Survey has estimated that the Velkerri B shale alone contains over 500 trillion cubic feet of gas in place. That's one of 4 stacked pay zones in the Velkerri shale. Obviously, we will not extract all of that gas, and when certain parties claim that the Beetaloo will be a carbon bomb and come up with estimates of CO2 emissions, they make very disingenuous assumptions around the extraction of all of that gas. And Empire contains a material position within the Beetaloo. We have over 29 million acres under lease. We've been focusing on our Carpentaria project, which is on the east of the basin. And just in the last week, we've been very pleased to share some very exciting results, not only in terms of flow testing on Carpentaria 2H that I'll step you through shortly, but also a major resource upgrade within EP 187. Our total 2C contingent resource is now over 1,900 petajoules of gas, and within EP 187 alone, our 2C contingent resource has grown from under 400 BCF of gas last year to now over 1.5 or 1,500 BCF of gas, which is about 1,700 petajoules. And as I mentioned earlier, being on the basin flanks, we have an extremely low level of CO2, less than 1% in our reservoir. This 1,739 petajoules forms part of a broader prospective resource base of 44,000 petajoules. And what is really limiting that from being considered discovered resource is a lack of well control. So as we drill more wells, we expect our resource base to continue to grow. This slide shows the dramatic increase in discovered or contingent resource under Empire's new strategy. So when this new board and management team was formed, we didn't have any discovered resource. We simply had a prospective resource. And over the last 3 years, we've grown that resource primarily through the drill bit, but also through the acquisition of Paul Fudge's Pangaea resources and the Western Beetaloo properties that entails. And it's been a delight working with Paul and Jackie as key members of our board and our largest shareholder, and we thank them for their support. In terms of what these numbers mean, so we have also in yesterday's announcement delineated not only the overall contingent resource base in EP 187, but also the average expected recovery that has been independently assessed for each well. On a low side estimate, that's 6.2 petajoules of gas per well. On a best estimate, which is a P50 outcome, 7.9 petajoules of gas, and on a high estimate, 9.3 petajoules of gas. To put this into perspective, we believe that in the pilot phase, our development wells will cost about $20 million per well. And then as we move into larger field development, that cost should come down to about $15 million a well and potentially significantly less. And that's highly consistent with the lived experience in the United States, where with additional scale and learning, you can bring down your unit costs. What this means is that in the pilot phase, we believe we can develop these resources for approximately $2.50 a gigajoule. That's the upstream well cost. There would also obviously be royalties to both the NT government and the traditional owners, and then a limited amount of operating expenditure. But you know, we see that as quite a competitive cost in terms of development cost. Once we move into that larger scale development, we then see that cost moving down below $2. So in Australia, gas is quite a politically vexed issue, as we're all aware. I cannot believe the number of times I've seen gas published on the front page of the Australian Financial Review in the last 12 months. The good news is that the Northern Territory government, a Labor government that was elected to power for the first time in its current term in 2016 on a platform of putting a moratorium on gas development from the Beetaloo. After a very, very extensive process, there was a 18-month independent scientific inquiry led by Justice Rachel Pepper of the New South Wales Land and Environment Court. A number of recommendations were made by Justice Pepper and her committee, which found that if all of those recommendations were followed, that fracture stimulation of shale gas could be carried out safely. And then over the last 5 years, there's been a very detailed process of implementing recommendations, and we now have what, in my experience, is the most stringent onshore gas regulatory regime in the world. In my former career at Macquarie Bank, I financed and invested in projects all around the world, and I believe that the most robust regulatory regime for onshore shale gas is in the Northern Territory. The Australian federal government has been grappling with very high domestic gas prices over the last 12 months, due in part to the war in Ukraine, but also due to declining supply of gas fed into LNG around the world, which was already causing prices to rise before the war. And high gas prices fundamentally hurt everyone. They hurt manufacturing, they hurt households, and in this high inflation and high interest rate environment we're in, the government felt it had to take action to protect Australians from those high international gas prices. The government put in place a number of measures, including a cap on the price, what they refer to as a reasonable pricing provision, adjustments to the Australian domestic gas security mechanism and other measures. But we were very pleased to see in recent weeks that the federal government has recognised that bringing new supply into the market is critical to bringing down prices over the long term and sustainably. And so they have actually exempted what they refer to as small producers from all of those mechanisms. A small producer is defined as a company that produces less than 100 petajoules per annum, which at a notional $12 a gigajoule gas price is about $1.2 billion of revenue. So a level of revenue that we would not expect to exceed for some time, but hopefully not too long. So in terms of the resource that we have identified, as I mentioned, we've just had a very, very dramatic resource upgrade, and our contingent resource is now the largest amongst our peers on the ASX, and also at a very attractive valuation, which we believe should the discount should start to unwind as we move into development. So now on to Empire's assets within the Beetaloo Basin. We have our Carpentaria project, which is EP 187 on the eastern side of the basin. And then on the western side of the basin is what we call our Western Beetaloo project, which is the properties we acquired from Pangaea Resources. The Carpentaria project covers 110,000 acres. It looks small on a map of the Beetaloo, but this would be considered a very large contiguous asset package in the US shale industry. The resource is now fully delineated by 2 seismic surveys, 2 fracture-stimulated horizontal wells, 1 vertical stimulated well, and also another step-out vertical well, and we've carried out 3 extended production tests. This is a significant amount of activity for a company of our size, and a real credit to our management, subsurface and operating teams that we've been able to do this safely and in an environmentally responsible manner, but also at a fraction of the cost of our peers. On the Western Beetaloo project, this is a very large area, over 1 million acres of prospective acreage. It's delineated by a significant seismic asset set, 5 spatially drilled vertical wells, and around 1,800 metres of core that has been taken. We are currently progressing regulatory approvals to carry out another seismic survey, and then we would look to drill a fracture-stimulated horizontal well, most likely next year. This project has a very, very large resource base with 28 trillion cubic feet of 2U prospective resource. I thought it would be worthwhile putting into perspective the scale of these assets that we own. So you can see in the bottom right-hand box Empire's Beetaloo asset packages, and then they are compared to the Marcellus shale. The Marcellus is a basin that I've had quite some experience with over the years. In my former life, we invested in some of these projects, and indeed Empire's New York State assets are located just here, so I've got some exposure to that basin. That basin has been an incredible economic boom for the people of Pennsylvania and West Virginia and surrounding states. The jobs there now, they have some of the highest paid jobs in America. They have one of the lowest unemployment rates in America. And also, it's now around 25% of total gas production in America, which, as I mentioned, has had a major impact, particularly in the northeast of America, in terms of displacing coal as a source of baseload power. Critically, a significant number of these wells are at very similar depths to Empire's Beetaloo acreage. There's certain others around the industry who say that being on the basin flanks, Empire's acreage is just simply too shallow, and the data simply doesn't support that assertion. Around 9,000 wells have been drilled in the Marcellus at similar depths to Empire's acreage. So now on to our recent news. So last week we announced updated flow test results from our Carpentaria 2H well. This well was a very successful well for us. We successfully drilled a 1,345 metre horizontal section, which all remained within the target B shale zone. So well done, Brucey, for keeping the well in the zone, mate. There were a few nervous nights of hard work getting that well drilled. We drilled this well. The drilling cost was around $10 million, which was substantially below the cost that our peers have drilled at, and we carried out a 21-stage frack. That was the largest frack job in Australian history at the time, a record that we broke with Carpentaria 3H. And critically, that frack job was carried out safely. I think it's worth pointing out some of the extraordinary measures that are put in place to protect aquifers. So I've had extensive experience speaking to pastoralists and traditional owners and other people in the Northern Territory over the last 5 years, a part of my job that I really enjoy. And one of the biggest issues that people are concerned about is aquifers. This is an issue that the Northern Territory government, the Northern Territory fracking inquiry heard from many players, and they put in place world best practice measures to protect aquifers. So essentially, what we are required to do before we carry out fracture stimulation is we have to drill what's called a control bore, which is if you've got the aquifer flows in a certain direction, the control bore is located on the well pad about 20 metres upstream of the well, of the proposed drilling location. And then you have another bore called an impact bore, which has got to be less than 100 metres downstream. And essentially what these bores are doing is constantly collecting water samples that go off to the lab, and the control bore tells you what undisturbed aquifer water looks like, and then the impact bore gives you an indication as to whether there's been any change to the quality of the water as it flows past the petroleum wellbore. You have to carry out those tests for many months before you can carry out the fracture stimulation, which we did. And as expected, our results have shown us that there has been no impact on the aquifers as a result of fracture stimulation. In addition to having these bores, it's also worth pointing out that these horizontal wells are approximately 1,500 metres below the surface. The aquifers are less than 100 or about 100 to 200 metres below the surface. And the fractures that are initiated through fracking tend to be 50 to 75 metres long. So there's huge overburden that is protecting the aquifers as well. In terms of the results, we're very excited with the flow rates that we've achieved. So Carpentaria 2H, we've flow tested it for a total of 127 days. It's produced 323 terajoules of gas over that period. To put that into perspective, pick a round number of $10 a gigajoule, that's over $3 million of revenue in the first 4 months that would be achieved from that well if it had been on production. This was a 927 metre fracked section. When we move into development, we'll be drilling 3 kilometre horizontal wells, and there is a multiplicative effect on production as you drill more, as you execute more frack stages. So the results we've seen equate to an initial production rate over the first 30 days of around 10.5 terajoules a day for a 3 kilometre development well, which is really starting to look like it may be economic. And this slide just provides that in a bit more context for you. So we've Carpentaria 2H was a 927 metre horizontal section. Carpentaria 3H was a 2.6 kilometre horizontal section. That was the longest shale gas well ever drilled in Australia. That had 40 frack stages. We'll be recommencing flow testing on that well shortly. And you can see down the bottom what a proposed development well would look like with 60 frack stages over 3 kilometres. Now turning to Carpentaria 3H. This, as I mentioned, was the longest shale gas well in Australian history. We believe it's right up there amongst the longest oil and gas wells of any kind drilled in Australian history. So a real testament to the skills and expertise of our team. And pleasingly, we drilled and fracked that well nearly $6 million under budget. That well has produced at rates between 2.6 terajoules a day and 6.6 terajoules a day for an average of 3 terajoules a day. And the well is not yet cleaned up, as we call it, which is where you're removing the injected water to get a stable flow rate. And so we will be recommencing testing on that well soon. All of this work now means that Empire is rapidly approaching the point at which we can move into a pilot development at the Carpentaria project. We've delineated a major resource. We've confirmed that there is a stacked pay of both Valkyrie B and C shale prospectivity. The resource clearly is large enough for us to commence a pilot development, and there are hundreds of drilling locations that have been delineated. The delineation of the drilling locations by Netherlands Sewell should not be considered an indication of our intent. That is simply the way that the independent assessors have identified discovered resource. In terms of the Western Beetaloo, we are currently undertaking clearances to carry out a seismic survey, which is delineated in the green lines, followed by a fracked horizontal, as I mentioned earlier. I must say, one of the really pleasing aspects of working in this area of the basin has been the welcome that we have received as the new acquirer of these properties from the majority of the pastoralists and traditional owners, and that is really a credit to the Pangaea team. One particularly touching moment for me when I was invited to stay at one of the pastoralist houses and meet them and the couple and their university-age kids who are back from university, was to hear about the support that Pangaea provided them back in the days of the live cattle export ban under the Gillard government. So that live cattle export ban completely smashed these people's businesses, and they are hard-working, honourable and independent Australian business people who were badly damaged by that policy, and it was really due to the support provided by Pangaea in terms of providing these families with civil construction work and so on, that really allowed them to survive that period. And I think the Pangaea representatives on our board should be congratulated for that. In terms of one of the hot button issues at the moment, so under the recent regulatory implementation under the safeguard mechanism, there was a specific requirement put in place that from the commencement of commercial production, Beetaloo Basin operators will need to offset all Scope 1 emissions. A lot of work has been done by Ben and the team and then independently assessed to work out the carbon intensity of our operations from a Scope 1 perspective. And then we've come up with some estimates of what impact that is likely to have on our revenue, which has also been independently assessed. We've looked at two scenarios. One would be the cost of offsetting Scope 1 emissions utilising Australian carbon credit units at the current Australian carbon credit unit price, and the other one was at the capped price that the government has put in place, which is $75 a tonne, then indexed at 2% per annum plus CPI. At the current carbon credit price, that would be around 2% of our revenue, and at the capped price, which is a much higher price, it's around 5% of revenue. As I mentioned before, our resource within the Beetaloo is one of the lowest CO2 sources of gas in Australia. There are many other sources of gas that typically have somewhere in the order of 10 to 20% of the total resource being CO2. And so the challenge of offsetting our emissions is comparatively lower. Also, despite some misinformation that is spread by certain groups, the reality on the ground and our lived experience is that we have very strong support from traditional owners. We have never carried out activities without their full and informed prior consent, and that is our ongoing obligation. Empire has conducted around 30 on-country meetings over the last 12 years. John Warburton, our director, previously CEO of our Northern Territory subsidiary, was present at the vast majority of those in the early years, and I've been present at the vast majority of them in recent years, because I believe that direct engagement and discussion is what is required to build respect and trust. And the mutual trust that has been built with traditional owners has been fantastic. We are very transparent with traditional owners. We've taken them out to our site to allow them to ask questions of the technical experts. And we've also provided significant economic opportunities, and we see that growing materially in the years ahead. I'm just going to quickly touch on access to market. So we are in a remote area. We're about 600 kilometres from Darwin. There is a small pipeline owned by Power and Water Corporation, an arm of the NT government, that traverses our tenements. That's about a 25 terajoule a day opportunity. Flowing on from, our goal is to get gas into that existing pipeline in the pilot phase. We've also been in extensive discussions with APA, including quite recently in relation to the construction of a new pipeline to connect the Beetaloo to Australia's East Coast gas markets. If you look at that map there, all of those full red lines are APA owned, the full lines are APA owned pipelines. APO is currently working on this proposed pipeline to connect the Beetaloo to Mount Isa, which would allow gas to get into desperately starved markets in Brisbane, Sydney and Melbourne. Just this morning I was reading in the Fin that the spot price of gas into Sydney got to $30 a gigajoule last week. This is a simply unsustainable level. It hurts households. We're going into winter. People need their heating. It hurts industrial businesses. It hurts manufacturing businesses. And also it fundamentally drives inflation. So every time we pay our mortgages, we're feeling the pain there too. So we need new supply to be driving down these prices to more sustainable levels. And that's a real goal of our company. In addition to APA's plans to connect the Beetaloo to Mount Isa, they are also developing a northern strategy which would involve a large pipeline connecting the Beetaloo to Darwin, where there are plans to develop downstream manufacturing and also to provide backfill gas into the Ichthys LNG plant and the Darwin LNG plant. We are in active negotiations with a range of highly credible parties that I can't name today for obvious reasons, for gas supply both in the pilot phase and moving into the full field development phase. So final slide, I just thought I'd step you all through what our focus is for now. So in 2021 and 2022, we had a range of successes. We increased our 2C contingent resource base. We signed MOUs with APA and Power Water around gas sales and transportation. We established a small credit facility with Macquarie Bank, which we really appreciate their long-term support. This year we have just yesterday announced a very significant upgrade to our contingent resource. We've announced highly encouraging flow rates on Carpentaria 2H. We drilled Carpentaria 4V that demonstrated the extension of the shales into the Carpentaria East area. And our focus for the remainder of this year is front-end engineering and design, including economic modelling for the pilot project. To put the 25 terajoule a day opportunity into perspective, that could be over $90 million of revenue per annum at a $10 gas price. We're working on subsurface design, surface facilities design. We aim to execute gas sales and transportation agreements this year, arrange the financing for the pilot project, and with a gas sales agreement in place and type curves from the wells we've generated, that could involve further debt financing from Macquarie or others. And then we'll be working on government approvals with the NT government and also the negotiation of a production agreement with traditional owners that has already commenced. If we can succeed in that plan, then next year we would look to be constructing the pilot project and then moving into first sales, most likely in the early part of 2025, and then that would allow us to start planning to move into larger scale development. So thank you very much, and we'll move to the next part of the meeting.
Thank you.